Hello guys, welcome back to my channel. Don't forget to like, comment, share, and subscribe. India could grow at 70% annually this decade, chief economic advisor. New Delhi, India should be able to grow at about 7% annually this decade as investment spending is expected to rise and the digital economy picks up, the chief economy advisor said on Tuesday. The government has already said it expects the world's five largest economy to grow at more than 7% this fiscal year after it's expanded by in the April to June quarter the fast pace in a year. Economists, however, say growth is likely to lose momentum in the coming quarters as higher interest rates cool economic activity, while international agencies are showing our trend grow at 6%. I feel the trend growth will easily by 7% per annum for the remainder of this decade and beyond, said Chief Economy Advisor V. Ananta Nageswaran at an event in New Delhi. I'm talking 7% as the very easily attainable growth rate, and I'm adding coming from the CPEC's capital expenditure pool, and another 5% will come from the digital public infrastructure that we have created. Nageswaran said that investment spending, which has had experienced back in 2000 to 2012, is going to come back, and that is going to be one major driver for growth. The rupee's depreciation of more than 7% against the dollar this year has pushed up the cost of imported items for consumer and business. But Nageswaran said the country was not defending the currency. I don't think Indian fundamentals are such that we need to defend the rupee. The rupee can take care of he said. Consumer expectation for U.S. inflation over the coming years declined sharply in the latest survey by the Federal Reserve Bank of New York, providing policymakers with good news as they battle to curb price pressures. Expectation for U.S. inflation 3 years ahead fell to 98% in August from 3.2% the previous month and in June, according to the New York Fed's monthly survey of consumer expectation released Monday. The outlook for inflation 1 year ahead declined to 7% from 6% in July. On a 5-year horizon, consumer new expect 2% inflation versus 3%. It was the growth rate mostly decline in 3 years ahead inflation expectation, which have fallen from a 4% peak in September and October 2021, that coincides with the Fed's pivot to begin removing pandemic policy support by signaling it will soon come as scaling back mostly asset purchase. The third process include in March, at which point the Fed raised rates from levels near zero. U.S. central bankers who aim for 2% inflation are currently increasing interest rates repeatedly to curb the highest inflation in almost 40 years. They are expected to deliver their third consecutive 75 basis point hike when they meet next week. U.S. inflation expectation for gas price increases also continue to ease, with households now expecting them to be wholly unsaid a year from now. The New York Fed survey showed expectation both year ahead price change for food fuel by 8 percentage point to 5% and 2 percentage point for next to 9%. Expectation for the housing market, which had been experiencing sharp price increase but has called in recent months, also moderated. Head home price expectation declined sharply by percentage points to 2%, its lowest reading since July 2020. According to the report, this line was broad-based across demographic groups and geographic regions. Home price expectations have now fallen by nearly two-thirds since the April 2022 reading of 6%. This line is housing price and rents lagging with survey data released by Fania May last week. Maybe that's all for me. Don't forget to like, comment, share, and subscribe. Thank you.